It's our forecast edition of It Depends. So this may be a little bit longer than normal segment, but we're going to try and give you the Coles notes right off the bat and then give you a little bit more thorough explanation. So if you just want the nitty gritty, here's what we're looking at for forecast for 2020. Expect in general that our market to continue. That basically means the status quo, what was happening in the fourth quarter of last year probably will carry out throughout 2020. So we're going to look at sort of some of the drivers, things that are hot, what's not, what are going to affect, and primarily looking at the economic variables, the stimulus. So we'll look at jobs. Are they increasing, decreasing? We're going to look at mortgage rates. We're going to look at global activity and how that plays out provincially as well as locally here in Calgary. We're also going to talk a little bit about the energy prices, touch slightly on the pipeline. That is going to relate back to the market as well as looking at mortgage rates. We're going to look at market segment price. We're going to look at the community styles that we've always do, the attached, detached, and apartment. And then finally, we're going to look at the surrounding Calgary and surrounding areas, Chestermere, Cochrane, Okotoks, Airdrie. So why don't we kind of start getting into it here? So what can we kind of expect and be looking at? Well, one of the things we can basically expect that there will be an increase in sales. So just know that the price point is indicative, but in some ways it doesn't necessarily reflect or will reflect the total number of sales that are completed. What are the drivers? Well, that is the price point. And now we can talk about homes that are going to be priced under $500,000 versus your higher end homes. There is a higher demand in more of the consumer good of value versus luxury finishing, so to speak. So let's talk a little bit about the jobs. The losses are certainly going to equal uncertainty. So we noticed in the fourth quarter there that there were further job losses happening in late November and December. We hope that that doesn't continue, but that will certainly put a downward pressure on the amount of sales activity. More importantly, it's certainly going to start to suppress the price point. So you can definitely expect that regardless of job losses or not, the higher end market will certainly start to see suppression on the prices there. Mortgages. Right now the Bank of Canada has talked that they may be doing some further rate cuts, and that's nationally, but there have been some changes in regional changes. So we can expect that regionally that our mortgage rates will start to change a little bit, which is good news for the buyers in the market here. The transportation capacity plus the new home construction, if it starts to exceed the anticipated forecast, we'll start to see suppression on the supply of the market of resale, which I think will be a positive thing for Calgary's prices. Globally, if we start to see that there is a drop in oil prices and investment, that's basically pretty straightforward. It's going to mean that the investment capital, both in the private and provincial, well, we definitely know that the provincial market doesn't necessarily have a lot of money in the coffers right now. We're seeing cuts across the board there that we saw in the fourth quarter. But primarily you'll start to see investment capital, or you will not see investment capital be coming in. So what's that going to do? Well, that's going to affect the job status. You may see further job losses. That's definitely something to note. People think, well, that's a positive thing for inflation, but not necessarily, because with the inflation, if the inflation is low, that's basically going to come back and cause further stagnation on the investment dollars. Looking at the rental market though, so where does that put us into things? Well, this may be the year to actually be investing in property. So one of the things are, I'm looking at 5 variables here that are positive. We are having slight migration into Alberta and even in Calgary right now, albeit it's minimal. Rate cuts that are happening, so investors can take advantage of very affordable mortgage rates. The economic uncertainty that's given you more option and more time to make the decision to find a suitable rental that is going to cash flow for you. The vacancy rates, we are starting to see downward trends on the vacancy rates right now. It's primarily, I think we're starting to see that a lot of people that couldn't sell in 2016, 17, 18, and 19, they've either taken it off the market or they have come into a position where they have sold, which has started to tighten down on vacancies. So that's a positive thing. It's not going to take as long to rent out your property / product. And then the wild card in there, and I'm sure that you're starting to hear the word purpose-built rental start to creep up or pop up. We're definitely seeing the cranes in the sky downtown. That may start to saturate the market, but I necessarily wouldn't be too concerned if you are buying a suburban residential rental. So this is definitely something to pay attention to, and this may further cause a suppression on the amount of supply in Calgary's market there. And again, that's definitely product under 500, but more likely under 400 mark, 300 being the sweet spot in that range if you're looking for something to cash flow. So looking ahead, where does that leave us on things that we've talked about? Well, the consumer wants, and that's basically in that sweet spot. It's going to be, under that 500K range. It's affordable, and the people that are in the job market, the rental investors, they're going to be looking for that product. The higher end, not so much. You can sort of expect that there is going to be further suppression on the pricing, and as well that the number of units sold will be less than the properties under 500K in that segment. But we can expect incremental growth, but there still will be a reduction on prices. So, in layman's terms, we need to remember not to confuse that we will probably have a stable market for 2020, but that doesn't necessarily mean it's a balanced market. Talking about the styles of the homes, we can look at the attached market here. And so with that, with the attached market, we can expect that sales will probably increase by about 3%. But the new construction will cause still a little bit of a downward trend on the resale home prices. The detached, which accounts for about 2/3, or will account for about 2/3 of 2020 sales. Expect those most of that product to be under the 500K, and it will perform fairly well for you. While the higher end product needs to be priced accordingly, as we've sort of talked about. Eventually, we will see the higher end market start to improve, but I wouldn't necessarily expect that to be happening in 2020. As I talked to you back in in September there with our head economist from Krebs, she was alluding to the fact that they haven't actually seen those step-up buyers go into those market-driven that segment of the market yet. And lastly, we'll talk about the apartments, which is going to account for about 1/3 of the sales in Calgary. We can still expect that with oversupply that we've got right now, that the prices will still continue to trend down. But with the supply being a little bit higher, we will start to see an improvement in the sales for that marketplace. So let's, with that bearing in mind, we're going to round out here a little bit with cities and towns. We'll talk about Chestermere. Last year Chestermere's sales activity was down 6.8%. and the prices were down, over 3.6%. So with the supply exceeding the demand throughout most of the year, the prices declined. And in 2019, the benchmark price was around 455. We can expect that to be about 3% lower than last year. And the prices on the downward trend will still likely continue to persist, but there will be a notable shift in conditions, whether from easing on the supply pressure or improvements in demand. So that's something to watch out for in Chestermere. In Airdrie, we did have sales performance was up about 4%. Well, the prices were down about 3% from last year. So you can see improving demand and easing supply are helping to push the market closer to a balanced area. So Airdrie may be an area to pay attention to for 2020. And talking about Cochrane, while the market remains oversupplied, we will start to see or should see adjustments in supply and relatively stable sales activity. And that should support a more stable market in the residential housing sector of Cochrane. So hopefully that's not too long-winded for you. If you have any questions, myself or my partners, more than happy to answer any questions. Have a great 2020, and we'll see you out there. Cheers.